Hello and welcome to Market and Sector Analysis. My name is James Boyd, standing in the stead of Michael Fairborn, who is out today. We also have Kevin Horner in the chat. He is a Broncos fan. I want to wish him good luck on the upcoming season. Let's hope that the Broncos win, so Kevin's in a good mood. And that would be me as well with the Nebraska Cornhuskers. All right, with that said, let's go ahead and kick this off, literally. Now, remember, when we talk about market and sector analysis, the information here is provided for general informational purposes only. Also, remember, when we talk about examples, we will be using the Paper Money software application. And as we do that, that will be for educational purposes only. Some of the examples that we pull up here today, might be interesting. Others, you might say, I'm not really interested in those type of setups. That's fine. Also understand that investing involves risk, including loss of principal. And also remember, when we talk about examples, they are just that. Past performance is no guarantee of future results. Now, in the disclosures, I don't see anything here about options, so we'll try to keep all of our examples stock-based, okay? There is some disclosures there for futures. We won't touch that. That will be tomorrow morning if you want to join us on futures there tomorrow at 9:30 a.m. on Thursday. Now, as we get started here, we want to talk about the markets really not just from a daily perspective, but a weekly perspective. Then we want to talk about what are some of those economic drivers that are maybe driving these trends. As we look at the trends, we want to, number one, observe where opportunities might be, number one. Number two, we like to also self-examine and say, hey, where is our portfolio now in relationship to where the current performance is? And as we talk about that, like in terms of sectors and indexes, you might say, geez, the areas I'm in, they were performing well, but now they're not performing as well. And that's important that you recognize sooner than later. And we'll point that out here today. What are some also areas of maybe potential risk? So let's go ahead right here, hop right in. Now, first off, I want to kind of give you the layout of the land. When I'm evaluating the market, just want to kind of show you the layout, okay? The top left, I have futures there. We're not going to discuss that. We hold that for tomorrow. But if we're looking at pre-market, post-market, evening, things like that, I like to put that right at the very top left, okay? Obviously, indexes would be number two, sectors number three, and then getting down to here, Dow Jones, of course, NASDAQ 100, S&P 100. You're going to notice that on each one of these lists, there's a number one. There's a number one, and there's a number one on the Market Watch, and there's also on charts a number one as well. And you're going to see why that's important, because when you're doing this analysis, you want it to be seamless. Your lists are there. The list that you have, if I click on UNH, it pops up on UNH. If I click on booking, it pops up on booking, and so on. That's the first thing of making your analysis smooth, okay? So if you don't have your list laid out like that, I found this to kind of be really helpful and just to the point on finding where are those trends. So first off, now the one thing is we like to do the analysis through a list / scripts and also visually looking at the charts, okay? So when we're talking about the index list, we're not only look at them in terms of in list form, where we can actually see the scripts, which I'm going to show in just a sec, but I also visually want to see the charts. The scripts are great, okay? But the biggest actually thing is you really can't take away from visually looking at the chart, okay? So what I want to do here is I want to kind of, let me kind of just make this, I'm going to pop this out, detach that. And now what I'm going to do is slide this over here to the right. So this is our index list. I'm just going to move it over here to the right for just a second, okay? Now if you take a look at this, I'm going to open this up. And if we were to look at, let's say, where that strength is, okay? We got week percent. We got 1 month percent. We got year to date, okay? So first point I really want to make is sometimes people talk about, I never buy the index because it doesn't move that much. So that's not true. I mean, you got the Dow. We're talking about the cash index here. 9.44%, S&P 18%, NASDAQ 17%. We're talking about the blasted index, okay? And if you take a look at the Russell, just 9%, okay? Now, if you look at semiconductors, that index itself, We got 25% on the index. We ain't talking about the stock. So first off, if you've ever thought about just buying the index, some people, that might make a lot of sense, okay? They're not trying to hold a stock. They're trying to hold a basket of stocks, okay? Now, when we look at, let's say, the relative strength with the trend column, I should say, the trend column, which is the continuation from Monday and Tuesday's discussion, we still have trend 3, which is price above both moving averages, okay, not in an area of resistance. We have a little concern, okay, on the S&P and the NASDAQ. Trend 4 would be price up above both moving averages, but up near an area of resistance, okay. 5, that means price is now falling down below the shorter term moving average. Mayday, 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 okay. We're losing altitude on price, and we're falling maybe down to the next potential support. So as we pull up the NASDAQ, I want you to kind of keep an eye on this. When you look at the NASDAQ stocks, many of them do not look healthy. Okay, so that's kind of first thing that we're seeing that's bad. The other thing that we're kind of noticing is when you look at the VIX, I said this yesterday, we do not like what we're seeing on the VIX, because when you look at the VIX, it's really showing like more of like a divergence pattern, okay? And if you zoom in on this, and it's hard to see because we had such an extension where we went to 65, it's kind of distorting the chart. But if I went and look at this, we have where the price is not making a low on the VIX. It's not, okay? This recent area is higher than that recent area. And the MACD, it's not dropping down. So I think this is where some investors might say, I'm going to start to look to profit take on some positions and buckle up for some potential turbulence that might happen in the market. When we've seen this historically, normally, that doesn't mean future, that means that we could start to see some volatility. If we start to see the VIX get above the shorter term moving average, that means that stocks most likely do the inverse. If the VIX gets above its 10-day moving average, this blue line, that means the prices of individual stocks fall down below their 10-day exponential moving averages. So you need to keep an eye on that. And when we talk about the sectors, okay, we already know that the index of the NASDAQ has struggled big time. Second would be the S&P. And when you look at the two sectors that are underperforming, and we'll show those, which is discretionaries and technology, okay? Which obviously if you said NASDAQ, you would think tech, okay? Now, what I want to do is, so I want you to keep an eye on the VIX. The takeaway from the VIX again is, are you near targets? Have you adjusted stop losses? Do you have pending orders for protection, okay? The moral of the story is every time the market pulls back, you should not be the same old investor. You should be getting better and better on timing of exits, whether that's hitting targets or near there, stop adjustments, and or protection, maybe using derivatives, whatever you like to do. Now, what I also want to kind of do is I want to go back to just real quick. When you take a look at the Dow Jones itself, okay, Dow Jones, let me pull that up. There it is, okay? Now, when you take a look at the Dow, okay, when we talk about these large cap stocks, okay, and by the way, when we talk about these large cap stocks, we're talking about these multinational companies. Now, wait, when you say multinationals, they're selling U.S. made products, okay, or companies abroad. And now we start talking about currencies. And you know it all. If you've been looking at currencies and attending our futures class on Thursday, you know that U.S. greenback has been getting a little beat up on the euro, pound, and among other currencies, okay? This index is kind of maybe benefiting from that environment as well. And if we take a look at that little double top, I'm going to ask you a question here. Are we now getting above that double top area? I'll just take a yes or a no. Kevin, you're not allowed to answer. Now, if you take a look at this, if we kind of said, is there a midpoint of the channel? Probably got about 400, 390, 410, maybe from low to high. And this kind of might kind of go back to, could we travel that width of the channel? Well, the width of that channel might be $20 there, okay, from top to bottom. If we travel from, let's say, from the 410-ish area up to maybe the target area, really talking about 430 or so, okay? So keep an eye on that. These large cap Dow stocks, which we're going to come to some examples there, they're still strong. The last 3 days, we've tippy-toed along the line of the old resistance area. That's good, okay? Now, by the way, if you're thinking about Dow stocks and you pull up Market Watch and then you go to Visualize, okay? Now, remember, the Dow is price-weighted. Price-weighted. So the stocks that actually have higher prices, Apple, Microsoft, they matter more. You look at Amazon, it matters more. And you look how much real estate in the dadgum Dow is in 3 bloody stocks. Okay, it's a lot. And what you're going to notice is little stocks like Intel that's at $18 a share and sinking quickly, it just don't matter as much. So ladies and gentlemen, boys and girls, this is like your exam in college. Your teacher tells you you need to know these 3 major points, and this other stuff that we're learning, it could be tested, but it's not tested as much as Apple, Microsoft, and Amazon, okay? That's just what it is. Get used to it, okay? Don't fight it, else you're going against the trend. Just know that these certain indexes can have certain qualities that cause it to go up or down based upon what the weightings are, okay? And we see that in sectors as well. Now, when we take a look at, let's say, the SPX and the NDX, pull that up, we saw on the trend actually says that we're in trend 4. Why? Well, because it's sensing, it's kind of from the script point of view, it's kind of saying we're up near an area of resistance. Now, let me ask you a question. If we're in trend 4, what type of strategies might the investor or trader consider if we're up above the 10-day moving average? Check. We're up above the 30-day moving average? Check. But we're not getting above the area of resistance. Ricebird, yes. Okay. So if we look at that, what type of strategy might the investor maybe consider deploying? Well, many investors might say, hey, I'm going to sell into some strength, maybe lighten up the position a little bit. Some investors might even say, I might try to do maybe like a cover call. Something might be forecasting consolidation. Okay. Maybe it might take some time to finally get a continuation pattern like the Dow is trying to set up. And then if you look at the NASDAQ, we are now down below one of the moving averages. Now, when we get down below the moving average, okay, that blue line, we're losing momentum. And what you're going to notice is the NASDAQ here really has a downward sloping line. Is that good or bad? Do we like downward sloping moving averages? No, we wouldn't, okay? So first off, when we see the NASDAQ like this, where that 30-day moving average is down, when we see that we're actually falling down below the 10-day moving average, we would now ask the question is, do we own any tech stocks that are under pressure? Now, speaking of that, okay, now here's the thing. When we do the analysis, what are we trying to do? We're trying to make investing or trading decisions, okay? So when I go back to, let's say, the portfolio, and I ask myself the question, hey, do we own any, let's say, tech stocks? We would definitely want to kind of ask ourselves the question, which tech stocks do we have, and review them in terms of, are we getting potential sell signals, okay? And we do have a stock, CrowdStrike, which does have earnings today, in which we're going to show that we're going to exit and not hold over earnings, okay? So we're going to keep an eye on that. Now, so first off, when we say the indexes, the last one that we did not bring up just quickly, the Russell, okay, it's inside the channel. It's at the bottom end of the channel. And if you take a look at that, if we kind of looked at the level there, so you can see show the price, okay, that price is at 21.84. And that upper line, if we kind of said, where's that price? I'll put that price level on there and say that as default, it's 22.62 as well. So it's like we said all week, right? We see that overall the Dow and the Russell being stronger, and the other ones, they're under pressure to say the least. So when I bring up, for example, our paper money account, I want us to kind of be mindful of kind of weakness in the tech area, okay? Now, here's the problem. A lot of people, they do not like to address things that maybe make them make a decision. Here's the point. We're not in the business of buy and mold. Okay. We're trying to have positions that, for example, are above the both moving averages, at least the 10. And if we're not above the 10, okay, we want to definitely be starting to watch, because now we could be losing momentum and start to drift downwards. Now, one of the stocks that I'm going to bring up right here is CrowdStrike. Now, I'm just going to speak to the shares, okay? Now, what you're now going to notice is, now, why didn't we do this before, okay? Now, even as of this morning, you could tell on the chart that maybe CrowdStrike was starting to kind of get some weakness. How could we tell? Well, we always talk about the shorter-term moving average going red. It did. We saw the moving average cross. There's 2. And as of this morning, late afternoon, we saw 3. So in our paper money account, we are going to sell CrowdStrike. Now, wait, what type of stock is CrowdStrike? It's technology. So a lot of times people say, well, geez, I got to look at all my positions. No, you got to look at the indexes and the sectors, and that's probably going to tell you over a 60% odds of how your position is doing. Over probably 60%. So if that sector is going down, the index is going down, then there's probably over 60% chance your stock is also under pressure, because it's correlated to that index and or sector. So keep an eye on that. Now, the biggest thing is, if you take a look at this, now James L. says, if you choose not to decide, you still have made a choice. That's absolutely correct, okay? The other thing is the investor is not learning from the past. So when people ask someone like, how long have you been in the market? Oh, 20 years. Well, that is, you're now making the assumption that they're better because they've been in 20 years. But you might be doing the same rookie mistakes as you did in the first year. So the trade we're actually going to do, and we're going to follow, when we see the 1, 2, 3, okay, the third latest, we now have an exit signal that we're going to follow, okay? Now, here's the deal. Some people are like, well, I got to make a decision. Exactly. Welcome to the world of investing. We're going to exit that position and sell the shares. Sold. That position right there, CRM, when we look at CRW, that is a position where we're seeing some sell signals and not wanting to hold over the earnings, okay? Now, why did you wait till right now to do it? Well, because we didn't have a class till 11 a.m. Eastern, okay? Could you have actually been a little bit better off to sell earlier, now, at 9:30 a.m. Eastern? Could you save yourself about $400 or $500 if the class was earlier? The answer is yes, okay? Now, what we also want to do is kind of look down this list, and are there any other tech stocks that might be under pressure? Apple, we're going to talk about, okay? We also have Amazon in there as well. That is a concern, because that stock has fallen down below that support area. Let me just show you what I mean by this, okay? So with what we're seeing on the Amazon, you're seeing that price is also in that negative type trend. Below the 10 and the 30. Never a good feeling when you're looking up at the moving average and that moving average above us as well. CrowdStrike did fill. So I think the big warning sign, flashing red lights on the NASDAQ, okay? Starting to see some sell signals in there. Amazon showing that. We actually see also, when you take a look at, let's say, Apple is not as bad, okay? But it rallied, faded, and now kind of getting pulled down a little bit, okay? Now, what's really kind of causing that, speaking of sectors or industry groups? The SOX, the index, the semiconductor index, not doing too well. As we zoom in on this, notice what's acting like resistance. Well, the last 4 or 5 days, we tried to rally into the shorter term moving average. Rejection. So it hasn't just been today. The last 4 or 5 days, it's been telling us where investors are not comfortable in owning it past. And that's not owning it higher than the 10-period moving average right now, okay? So first off, do you own any tech stocks? Second, did you look at those and actually see if there were some sell signals potentially on those charts? Have you made a decision on what you're going to do? You're going to sell the stock? You're going to sell some of it? You're going to protect it? What are you going to do? Okay. Now, what I want to also mention is if we're starting to kind of see more and more sell signals, then on that VIX, and this is the second warning sign I'm going to give, okay, do not like what we're seeing. We have a tilted up W pattern on the VIX. Now, a lot of times people will say, well, gosh, I went to this class and the guy was so negative. Well, no, sometimes they're so stinking positive that we don't like what the charts are showing. Okay? So here's the thing. I don't take it as negative or positive. We're just reading the chart, and what we're trying to do is we're trying to move the portfolio in the way in which we see it. If it's buy signals, great. If it's sell signals, sure. Okay? There's nothing emotional about this. Okay? Now, I'm going to kind of speak to also when we take a look at sectors now, okay? When I take a look at sectors, and we'll bring it back to, let's say, the quotes, go indexes, let's bring up personal. Let's bring up the sector list, okay? Now, when you take a look at the sector list, couple things. What kind of warning signals are we seeing in terms of sectors? Now, first off, before I get an answer, the only sectors where the moving averages are down, it's these two. The only sectors that really have had for the last 5, 10, 21, 42, 63 days that have been underperforming the S&P is yours truly, technology, and discretionaries. Guys, we can't say it just today. Can't say that. The only way we could say that is if we weren't doing our routine daily, okay? Now, if you take a look at this and we said, what else are we seeing that we don't like on this chart? Well, when we look at the trend showing trend 5, okay, what does that physically look like on the chart? What is it going to look like? Price below the 10. Okay, so when I pull that chart up, if I click on it, pull it up, what is it going to look like? Price now falling down below the shorter term moving average. Does that look like a buy signal to you? Not many people would say, that ain't buy signal. Me. Okay, the investors say. Okay, so when we take a look at, let's say, technology, if you own technology stocks, we hit that. But the second one I'm going to also hit is also discretionaries. Now, if you take a look at discretionaries, we're actually seeing now the price is now also starting to fall, maybe down below that 10-period moving average. Now, why are we doing the analysis? Well, I'm trying to wonder, are we in the right places in the marketplace? Where are we getting buy and sell decisions? Okay. Well, we're probably not getting buy signals in discretionaries or tech. One of the stocks that we have in the portfolio that I want to address now, when you take a look at a stock like DEC, what type of stock is that? Decker's Outdoor Corp. Okay. Now, if we look at the trend that this is in, Decker's is showing that it is in trend number 4. Now, if you were a stock investor or trader and you said, hey, James, what might be a goal? Where might the investor try to sell their stocks? Trend 4. That means that stock might be right pinned at the area of resistance. Okay. If you wait for the stock to drop and go trend 5, you have now given back some of those profits that you might have, you had better profits, and then the stock falls down, goes trend 5, and then you say, geez, I could have been $500 better had I just sold into the major areas of resistance. Now, you got to remember, you don't just have probably one position. So if that happened on 5, 7, 10 positions, that adds up and leaves a welt on the portfolio value. I mean, let's just say the way that it is. Decker's, when I pull this up, I want to evaluate, are we at an area of resistance, and maybe are we starting to kind of falter a little bit? So when I pull up this chart and zoom in on this, are we starting to see some sell signals on the chart? Okay. Now remember, guys and gals, I can only count to 3. Uno, dos, tres. That's all I know. Okay. Now, if I take a look at this, this has been acting like a pretty good line of resistance. Why are we doing the market and sector analysis? To create buy or sell decisions, okay? When we did the market and sector analysis, specifically sectors here, we knew that discretionaries wasn't that great. If we own discretionary stock, we're probably now starting to really see some sell decisions, okay? And if I look at this and say, do we have the shorter term moving average red? Yes. That's one. Did we get the moving average crossover? Yes, right there. Third, did we actually get the shorter term, the 20 period moving average? Did we also get that to go red? The answer is yes. When was that signal? It was yesterday. Now, I don't know about you. Sometimes we say, but my profits were so much better when it was at 979, not 952. I know how you feel. But some investors would rather have $282 than be down $282. And not all of your gains are going to be home runs. But sometimes these couple $100, they add up, and so could the couple $100 losses to the downside. We're going to sell the position. So I want you to kind of notice something. When the volatility starts going back up, we start to get more exit signals. When the volatility goes back up, we start to get more potential exit signals, and we start to increase cash in the portfolio. Cash is a position. So what we're saying is we would rather be long cash or own cash than own Decker stock that might be now under pressure, and we're trying not to hold on to stocks where we have red moving average lines and that red shading. If we hold stocks when we have red shading, there's a good probability of losing. Now, okay, James, when you talk about it like this, it makes me feel negative. Okay. Now here's the thing. You're thinking emotional here. Don't get so kind of emotionally tied up. Okay. It's just, do we have a trend green? Do we not have a trend red? That's all it is. Okay. Stop thinking you're just taking it too personal. Okay. You need to kind of become like a computer robot and just saying, I'm just trading signals. That's all I'm doing. Okay. And what happens with one position, if it's properly position size, probably doesn't matter that much. It's not about one position. It's about the portfolio positions, okay? If it is about one position, it's because you're probably over position size, okay? Now, what I want to also do is I want to go back. Well, James, are there any sectors that kind of might be bucking the trend so far? Well, let's take a look at this, okay? So when we take a look at the stocks, I should say, excuse me, sectors. Now, by the way, if we said, is there any other sector that's kind of showing some downside punishment? Okay. It's energy. Okay. IXC, we haven't really been that bullish on energy. I don't think we hardly have any positions in energy. Okay. Now, if we come back to, we have real estate 3, financials, which are positive today, industrials, which are positive. You have healthcare, which is positive in trend 3. Utilities positive and trend 3. Now, what I want to do is I want to kind of take a look at some of these positions in these areas. Now, by the way, when you look at utilities, healthcare, industrials, and financials, you're going to see that we have a close above the high of the low day right there. Okay. Showing that, what does that mean? A little run to the upside, little pullback. Now, that pullback might just be 1, 2, 3 days, and then it's bouncing again. A little run up, pull back, 1, 2 down, and then bounce. A little run up, pull back, a little bit deeper, bounce. That's what the Caholt is showing. It's trying to show, are we getting a bounce after a pullback? And that pullback might be only 1 to 3 days. That Caholt is what it's trying to show us. When we look at, let's say, is there any sector here that is showing a brand new high? Okay. There's only one sector. And that is, in this case, we see that this is really showing, okay, the financials, okay? It's showing a 1-month high labeled as 20 days. DH stands for days high. And if we look at 55 days high, we're kind of using that as an intermediate high. Okay, now, number one, the investor might say, I'm going to buy the individual, let's say, sector. We're not going to do that. But if we looked at the individual sector and said, how much is that sector up year to date if we use IXM? It's almost up 20%. Now, I want to kind of say this. A lot of times investors say, I'm getting started with investing. I don't know where to get started. Look, buying sectors, okay, is an interesting place to start because you're not picking an individual stock, which might take more skill. You're buying the neighborhood of stocks. You don't have individual earnings, okay? And so that might be a great place to start. Now, Connie Hill, okay, on Tuesday afternoon, she actually talks about ETFs. And then also on Fridays, okay, there's another ETF class right in the morning. And guess who teaches that? Kevin Horner, okay? So make sure that you're aware. And by the way, Connie's class is on Monday, okay? Monday ETFs, and then Kevin's is at 9:30 on Friday. So if you said, look, I'm getting started with investing, I'm maybe not ready to go stocks, but I want to do ETFs, and maybe sectors might be a way to kind of get allocation of certain areas of the market that you like, there you go, okay? Now remember, both of those sessions are not recorded. So for example, you need to be there live, okay? Now, if we take a look at this, what I want to do is I want to talk about some financial stocks. Yesterday and the day before that, and the day before that, and the day before that, joking, we talked about 2 days, is American Express. Now, I just want to show you a couple stocks, okay? So when we take a look at a stock like American Express, that is one that is really still holding. It was up to 258, and some of these short-term traders came in and knocked it down. What? I mean, the horrible people they are. I'm just joking. So, okay, not as high as it was intraday, but still holding that 253 area. We're going to continue to watch that. Now, Visa. If you take a look at Visa, Visa is at a kind of an interesting area. Why do I say that? Well, you take a look at, let's say, Visa in this case, we kind of draw the diagonal line down, okay? Draw the diagonal line down. What is that line connecting? Lower highs. You get a couple lower highs, you get a downward diagonal line of resistance. Now, if you take a look at this, kind of draw the horizontal support, equal lows, you're going to kind of see that the price is trying to smash its way into this horizontal line. Now, wait. Anything above us? Well, we got an area above us. You're going to see that it's about right there. So we're now seeing, if you take a look at this, Visa now poking its head inside this old channel. Now, I want to kind of speak to this, okay? So let's say I kind of played someone that I don't have any experience. And someone says, hey, I'm starting to see the price above the moving average. Okay, fine. The price is also getting above the line of resistance. And I say, but I don't know when to really get in. Okay. Now, notice yesterday on this chart, we had that green dot. The green dot is signifying call hold. Okay. Now, let me zoom in hard on this. Now, notice what we saw in the last couple days. Went down for a day, red candle. Went down for 2 days, 2 red candles. Went down for 3 days. Okay. Hands another red candle. Now, the call hold dot, as listed right there, shown right there, why is that showing on that day? So of these 3 days, which one is lower? Well, that person says, well, duh, James, if you can't get this, you're never going to get it. Okay, don't be mean to me. But if we said, well, day 3 is lower. Okay, fine, check. Now, the investor at the last 90 minutes of the market, why the last 90 minutes? Well, because they're wanting to make sure that it's closing above that day's high, day 3. Why day 3? Because we're taking the entry signal off. Are we closing above the high of the lowest, most recent red candle? There were 3 most recent red candles. Which of them was the lowest? The 3rd day. And what was the high of that day? There. And do we close above there? Yes, yesterday. Okay, fine. So let's say yesterday we missed the signal. We missed it. Too late. Now I'm going to have to look for another example. Well, that's really not true at all. Okay, now there's 2 ways. If we miss yesterday's signal at the end of the day, there's 2 ways to do this. How could we do this as a trader? How do we do it? What might the investor do in terms of an order to try to get in? Now, number 1, they might say, James, I'm going to put my order right at maybe about a 1/3 down. And James, why not half? Well, because you're now assuming that it's going to be perfect. I don't know about you, but it ain't perfect. Okay. I'm going to put the order like a buy limit order. And I want to write this down because I feel like a lot of you might be missing some of these golden nuggets. Okay. That we're kind of laying down. So let's say the hold happened. Okay. Yesterday, what's this plan of attack? Well, we're going to actually put a buy limit. Okay. At a third down of green candle. And I just said that. I just showed you that. Now, there's a second way we're going to do this. We could also do like a buy stop above high of red candle. And I'm talking about today. Okay. And we're going to add just a quarter above that. Now, could you just do one order where it was literally just trying to get both of those? It's one or the other. Sure. Okay. Now let's do this. Okay. So we're going to try to buy either A, where we are, if we go down to maybe the third of this candle, or if it never falls down to that point and it shoots back up to the upside, we get above today's high, it's going to also try to trigger. Now, guys and gals, I think sometimes, especially newer investors, they're always trying to cheap this, like lowball the stock price. And a lot of times it's hard to lowball the stock price. Okay. Sometimes that stock has momentum and trend, and you feel like you constantly are just saying, I missed it again. Now I'm going to put the price at 269.81. It's like a third down from yesterday's candle. What is today's high? Today's high is 271.98. If we added a quarter to that, just for a little filter, it's going to get 272.23. Okay, so how do we do this? We're going to right click on the chart. We're going to go to where it says buy custom. And what I'm going to do in this case, I'm going to say with OCO bracket. Now, the first thing that we're going to do on this order is we're going to say, what's the position amount? This is really not the point of this, but we could just type in the capital amount by just going to the dollar sign. Click on that, and it's rotating through dollar amount, percent, a certain number of shares, a percentage of the account, and so on. We'll go dollar amount. We're going to say $10,000. Example given. Okay, $10,000 of Visa. Now, what we're going to do is going to go to this limit order. We're going to go to where it says market. If you want to stop missing continuation patterns, let's get better, not just kind of keep saying I missed it again. Okay. So now what we see is we got market GTC, click on the gear. Once I click on the gear, I'm going to say symbol V mark. We're going to say less or equal to. We'll confirm that in writing. And now what I'm going to put here is I'm going to say 269.81. Now, if you get confused on this, is it less than or greater than? No worries. Just go down here and read this. Mark price security is less or equal to 269.81. Okay? So that's kind of that third of the way down inside yesterday's candle. Number two, click on it again. The mark. We want the greater or equal to the stock price is greater or equal to what's the price? 272, okay, 23. Now, I think a lot of times people think, man, am I investing? I got to learn some golden indicator, okay? I push back on that, okay? A lot of the times it's really more about orders. So this is saying either buy on the dip, try to get it closer to the support inside yesterday's range, and or if it goes above today's high, get in. Think about how many trades you missed because you lowballed the stock prices, okay? And you never put this bottom order on. How much does it cost? It costs a lot. Cost a lot, okay? And so notice on, traders that have experience, they're going to use both. They're going to try to buy the dip, or if it doesn't dip and the price surges up again, they put that there. Now, this freaks some people out because why would I buy something in the high? You married a person at the high. When they hired you at your employment, you were not at the 52-week low. You were at the 52-week high. That's why they hired you. Okay. Remember, this is so much about wealth and trading and investing. It's about mentality. Notice this is not poor person mentality, try to buy cheap. This is, for example, thinking about wealth mentality. Okay. Things that are making money tend to do things that are making money. And there's typically trends with those, uptrends. Okay. Now, what I'm going to do is we're going to save now just for time's sake. Okay. We're going to go back to this. And if we said, where's that potential upside target? 278. And I cannot stress what I just said enough. When you really talk to people that are successful, their mentality is different. Okay. We're going to put 280 there. And then if we look to the downside, if I gave a comfortable stop loss, if I took the 10 period moving average less 2%, okay, you're now going to see that's going to be, if we took 2% less than the 10 period moving average, that's 262.18. Okay, there's where you got right there. So now we already have American Express. And I want to kind of bring up another point here, okay? When you find an area that's attracting capital, successful investors tend to not just like do one stock in that area. They pepper a couple stocks in the same areas to try to enhance their potential returns or losses, because they could be wrong. And they're trying to nail, maybe a couple of stocks that might go up in terms of an industry. Don't ever forget that. But by the way, it's the same way if they go down. Okay. Confirm and send. Now what we're going to do is note this, and we can read those red lines there. Okay. Now I want to kind of go back to something just real quick. A couple of these other stocks. I want to speak to industrials for just a second. Okay. When you look at industrials, we know that with what's been happening abroad, to say the least, we know that some of these aerospace and defense stocks have been quite strong. One of them that's probably not talked about enough is Triple M. Okay. The other one is Lockheed Martin, which shouldn't surprise you. Okay. You watch the nightly news and you watch what they're pulling, the ships that are sailing, the drones, the planes, and the technology that's happening, pretty unbelievable. Now, it's not just that. We see rails actually getting a little push here as well. CSX as well. Okay. NSC, excuse me. Okay. Getting a little pop. We also see Raytheon also in the mix. Brand new high on here today and holding it. And if we add kind of one more aerospace and defense and a brand new high. Okay. And notice as this stuff has just kind of escalated, those trends just kind of continuing there. Okay. So I want to kind of recap. When we look at, let's say, the sectors that are still showing that strength and still going, financials, okay? Now, remember, what was kind of the economic tailwind? Falling rates, okay? Well, why would that really matter? Well, at banks, they're not just making money on interest rate differential. They also have a trading desk, okay? And that trading desk at the bank might trade, let's say, certain stocks that they might do well in that environment, but they also might trade, let's say, products that benefit off maybe products where you're thinking interest rates might fall and prices go up. Play both. So you got to imagine they might be kind of considering that or already done that. Now, when you look at utilities, not horrible, okay, but kind of a slower moving train. When you look at, say, healthcare, there as well. And if you look at, let's say, staples, there it is as well, brand new high. Now, the goal of an investor, I think, is probably going to have at least 3 sectors in a portfolio, at least. Preferably, maybe having or considering 5 sectors. Maybe 1 or 2 that would be defensive, and the other 2 would be a little bit more mid to higher beta to try to get some growth as well. But these lower ones, beta, dividend paying ones, these are ones that still have trend too. They're just not going to tend to go in the same percentage, okay? But they can still trend. Now, so we did some trades here today. CrowdStrike, we exited. We did get the trigger on Adobe yesterday. Keep an eye on that. We did also do the example and kept an eye on American Express and Visa. Keep an eye also on Travelers as well in the same space. I'm out of my time here today. I want to kind of just show you some quick resources. So we do this class on a weekly basis. You can find us by going to YouTube and just searching Trader Talks, okay, by Schwab Coaching. This is our page. You can subscribe to that page and just get it right on your mobile device as well. We also have, for example, this page that's going to show us all of, for example, our webcasts. When you scroll down on this page, you're going to see the calendar for our events on a day-to-day basis, okay? Our next session coming up is Managing an Option Portfolio with Cameron May. If you'd also like to say, well, do you have other classes that you have, maybe in a live event format, you're going to see that we have a class on an in-person basis in many different areas throughout the country, with Anaheim coming up on the 13th and so on. Make sure you are aware of those, as we are in Miami, Santa Clara, Denver, New York, DC, Tennessee, Nashville. And you're going to see many other places, Orlando, Houston. Check those areas out. If you're there, make sure you register for those events. Thank you so much, Kevin, for answering those questions in chat. Today, what our goal was, we wanted to review where that kind of market strength was, or the lack thereof, and keep an eye on the NASDAQ and the VIX. This has been the class on market and sector analysis. Thank you so much, and this has been recorded. Stay tuned for Cameron coming up next. Bye-bye.